Rory, what are you seeing in terms of a flows perspective at the moment? Like, what's getting the most cash?
Yeah, I mean, I suppose there's always a core component of a portfolio or a core component of our product set that receives strong inflows. So that's typically, funds that are tracking the S&P ASX 200 index or maybe an MSCI World Index. They're always highly represented in terms of flows. But I think if you look at it from a percentages point of view, so in terms of percentage growth, where are we seeing large increases? It's around those thematics. So there's two in particular, I think, that are worth calling out. So the first one is around technology. So we're seeing strong inflows into ETFs, as an example, that follow technology as an investment strategy. So it could be global tech firms, ETF, as an example. But the other one is ESG. Obviously, we're seeing strong growth in ESG, and that's very much investor-led. There's been, I think, a huge increase over the last number of years on the number of Australians that are looking to their investment manager to be, investing responsibly and investing according to that ESG framework. So we're seeing strong growth there. In particular, but I think we're still, to be honest, at early stages of that growth. In terms of the products that are listed on the ASX, we have about 15 ESG focused ETFs, and we also have 16 ESG focused M funds. So just over 30 products there that have some form of ESG focus in their investment strategy, and there's about $3 billion in those funds. But that's still a small percentage compared to the overall fund that's in ETFs and M funds. So it's just sitting at about between 3 to 4% of the total fund. So it's strong growth, but coming from a low base, and I think we'll see more growth there as well.
Yeah, it's interesting. You say, investors got 30 options of the 2,500 options. I was actually surprised to hear that it's that small a number of options that are reflective of investments that are investing in a socially responsible or with the ESG ethical type screens and labels. But I suppose if you look at the number of funds as a proportion of the total money that's there, the total number of options versus compared to the purport, like the funds and the flows, that they're punching above their weight when it comes to their share of the pie, which is good to see. And thankfully, there are now increasingly more and more options in this space, because I think historically that's been one of the real challenges for people that want to invest in a way that's socially responsible or with ethical type or environmental screens. And thankfully that's changing as more people come to the party and create these products that investors can access to invest in a way that's easy, but a way that's going to deliver them results without them having to do backflips to get there.
Just to add to that, I mean, I think it's been, the first ETF was listed on the ASX back in the year 2000, actually. And it wasn't until 2015 that we saw our first ESG-focused ETF listed on the ASX. Wow. So, that's actually, in the scheme of things, not that long ago. And then it's really only over the last kind of 2 to 3 years that we've seen that quite an uptick in terms of the inflows into those ESG-focused ETFs. So, yeah, I think that's why I say I still think we're at the early stages of this.